Welcome to TradeTheMBI.com. This is John. This report is for the 7th. Well, as expected, central banks flooded what they could on the backside to support everything. Even the Bank of Japan got involved and started supporting, saying that they're not going to do any more rate cuts. And that was all that was needed to stabilize the situation as they realized that the market wasn't going to cooperate with their attempts to bring things back to normal, at least from a credit standpoint in that. But big jump, fail, but pretty much stayed above the 23%. That was all that was needed for the ES to get there. You can see we had a complete collapse of shorts. They were happy to take their profits on that. We got Magenta moving up and didn't get a crossover of steel below cyan, which means that the likelihood of it being a long-term run is less likely. Shakeout beginning its slight improvement here. That could be enough to stave things off. And as you can see, we never dipped below the red line on the extremes. So this was all just a shakeout plan, fill in, positive extremes that we've had for some time, and scare enough people that wonderful situation. All the call buyers that were jumping into the situation when things improved, and then you get added puts coming into it at the end of it, and it just lets the dealers go back and forth with it and erase everyone. So as they get panicked, they go the reverse direction on them, and that's part of this volatility that we've been seeing. From an NQ standpoint, though, you can see difference. MBI White still in the lead now. As long as magenta is above, that tends to project more weakness. What you look for in this particular case, when you have magenta leading, you know that you're going to have a bounce back situation, particularly if the magenta crosses that MBI white. That usually is a stronger one. You see that a lot in the shorter time frame charts. And as long as you have that blue above gray, you're riding smooth. It's when you get the steel dipping below cyan and then coming back above usually is where you start to create your weakness, which is pretty much where we were in the lead here. And then once you had steel cross above, you started to create some additional weakness going into the setup. And that's kind of what I look for, and particularly when you have magenta under the 25 from above breaking below, you get that strong move that we saw right there. And I think this will just continue back and forth again. It's pressured to come up to, obviously, for the NASDAQ. You can see we've got the previous algo levels, and I think you're going to see a lot of that back and forth going into the same. You don't have any improvement from a DOC as far as long-term, mid-term buyers. I think a lot of them are on the sidelines, and ironically, they're making some foolish trades, which I've been enjoying the bond market for the last couple of years here because they've been epically wrong in every situation, and why people were getting those minuscule yields relative to what we see from an inflationary standpoint. Amazing stuff, but you gotta love it. It's okay when it's even better when you can see how wrong they are in a situation. The oil fade has been helpful, but we may see a reverse. Russia was just talking about they're seeing a need for another million plus barrels a day. You got to parse that with whether or not the broader economy of the U.S. is slowing down at all. And I think that more likely than not, I think you're just going to see that fits and spurts where it looks a little soft. But definitely the unemployment numbers are higher from a full-time standpoint and fewer job openings available. And you can see some of the pain in the tech world is going to grow. That AI trade that everyone was so excited about, it's just like the early era of dot-coms and internet, where they were throwing money at the thing, and it was just a little earlier before the demand actually existed. It wasn't wrong, it's just the timing was bad. Euro, great move for the euro. They can't complain about that. It's dismal, and yet they're still getting afloat, which is hilarious. Gold, still going to be a strong move, no question about it. None of this has changed any of the realities. A lot of times, though, when the market is making a fade, they have to sell off various assets to cover liquidations and things like that. And I think that's kind of what you saw in the crypto world here with Bitcoin and that. Not to mention that we talked about the other supply issues, the fact that Biden did moved a significant amount of it to another account for potential active trading. All these things have been pressure on Bitcoin as well as ETH with the regulatory situation. ETH, though, has suffered significant worse performance. But again, all it is just filling the backside of these positive extremes that go all the way back to the beginning of the year. So, do I see any of it as incongruent? No, it's just filling the expectations on, like I've said, a broader timeline for different trades. That's why those algo positions, they can be wrong for a little bit, but overall they just tend to reapply and go back at it. So you can see from the broader downturn, we just moved back up to where we had that secondary break, which was Monday's collapse. So they brought it all the way back up to that, and they should try and push above it. The question will be whether they get any ceiling on that. Here from 50K, you just could be watching for that magenta to break down below. And of course, cyan under red. That's why you have a little white candle there. Always a buy in that configuration. Intraday, it was fairly clean. You saw the pre-market dump, and then the liquidation scenarios were filled, just before the open there. Then, the liquidity was just thrown at everything, and it wasn't much of it. And then by later in the day, they've got to recoup that. They let it fall, and there really wasn't a whole lot of demand to hold that. But didn't matter, because here we go into post-market. That's forwarded right through there, and it's been nothing but roses, and that's the easy part of lifting it during that, and that will trap a lot of any shorts that took advantage of what they thought was weakness at the end of the day. And this is the plan. You hope that you can force enough short cover that you will drive things up and up, that you don't, all the people that were slightly scared get less scared. And this is a common event within a broader short setup. That hasn't changed, but overall, I think that we're just seeing what you called it, not even a dead cat bounce. I think this is just still some of the trying to figure out what's going on election-wise. The uncertainty there has really thrown things into a loop, and then you haven't even added in, the Israeli potential conflict that could start any day. I saw that the U.S. was offering bribes to Iran to keep them from attacking, so we'll see if that plays out and works. They're offering to remove sanctions and unfreeze assets or whatever. So that's the long and short of it. Have a good one. Anything relevant, I'll put in the Skype chat. Trade well.